Hello and welcome to Trade of the Week with me, Zinati Gama. Today, we'll be getting technical analysis on property counters, Hyprop and Redefine. Then we change gears and shift to the logistics industry with analysis on Grinrod. And joining me for the conversation is Senior Technical Analyst at the Money Hub, Moxima Gama. Thank you so much for your time and for joining us today, Moxima. Quite interesting counters because you've chosen two property counters to focus on today and then logistics. And what's interesting about property is that there seems to be a lot of appetite, particularly as the macroeconomic environment kind of improves. Would you say that that's maybe also why you're concentrating on them today?
Primarily, yes. It's also because we're getting those CPI figures coming out soon, so that's a huge determinant on whether interest rates are going to be cut or not. Now, what I did like, and I've been talking about property stocks for the past 2 years. I was saying, look, this is the time to start getting in because they've been trading at a huge discount. And we've just kind of seen, you'll see from the charts, we've kind of seen that they out of that, well, the two I've chosen, Hyprop and Redefine, is just to show that it's out of that huge consolidation is in and is now commencing that ascending phase, which is, I call this segment cheap but bullish because effectively they are. Trading at really good prices, cheap prices with a lot of upside potential. And I always say with these property stocks, it's always, or these REITs, they're a nice alternative to getting physical property. Because you could then invest, they've got good returns. As I said, they've been trading at a huge discount. Now you're getting them really, really reasonable. It's like a 50% off or 80% off with these. You know how we love those. So I'm concentrating on that. And then you said I switched gears to Grinrod because I'll show you why with Grinrod. It is a very cool one-stop shop for logistics. And their valuation has actually gone up in the past 5 years to 230%, their company valuation. So that's, and you know, there's still that upside potential. You see from the charts as to why. But as I said, these are really reasonable and are starting to get into that bullish mode, which I feel like it's a good time to be. It's like a hot donut. It's a good time to indulge.
And we love hot donuts and hot fit cook.
Basically.
Right, let's start off with Hyprop.
Right.
And quite interesting there because they also just got rid of some of the African assets there. Talk to me about what it looks like on the technical front.
So on the technical front, it does show. I've zoomed it out in order to zoom in. So this first part of it is just to show the fact that it's actually broken out of that bear trend that it's been in, and that bear trend is dated back to 2016. August, and it recently broke out in 2021. But it didn't really break out and go up in a hurry. It started to doing a huge consolidation, but that was the breakout point, and we're seeing it trading sideways, which for me is sometimes, you can never know when the consolidation is going to end. It could take years. I mean, from 2021 to 2024, this is when we're seeing the consolidation starting to end, which is the reason why it then becomes, it just flags that green flag that it's time to get in. It's maintaining, it's kind of, started that upside. As you can see itself, this is a share that fell to about 14 Rand 65. It comes from a high of 400, sorry, not that much. 142.95. So it comes, it comes from a very low base with a huge upside potential should it complete that 100% retracement. So it's a very good buy and hold, and kind of increase your position as it goes up. So we're going to now switch into zooming into this consolidation phase itself. And the two fresh breakouts. Well, the other one is not really fresh, but the second one is, which would be the breakout of that bear trend and the breakout of the consolidation from the sideways pattern between 39.05 and 23. So it's quite obvious that it's coming off at this point in a justified way, in a sense that it's coming off a very extremely overbought position. Which is great because you wanted to do that in order to start picking up the stocks cheaper. Because if you got in at that point in time, it would have been a bit too expensive, right? Technically speaking. So what I am suspecting is it's a whole bottoming up pattern, which is a huge bullish pattern where you get that descending phase, the consolidation, and the ascending phase is starting. So getting it at current prices, particularly above 39.05, makes it a good buy for a long-term buy and hold. So it is coming off at this point. It's important that it bounces at 39, where it gives you a nice buy signal with potential upside to 52.40, giving you another nice buy towards 65. As you could see, I mean, I told you it was at 140 something, that's higher. So this, you'd be following it through as it goes up. So it's one of those investments that you add on. For as long as the uptrend or that ascending trend is intact, that's when you start adding on for every resistance level breakout.
That's quite interesting because, I mean, just even that green line of the potential upside there is quite steep.
It's steep.
Do you think that it could test those highs that we did see before, but maybe on a more gradual...
Gradual, please. Yeah, don't quote me. I'll be like, it's not going to happen tomorrow.
And just
gradually fed. Remember, it's a buy and hold. It's a long-term investment. But at least those levels assist you as to, once that level is breached, it then shows you the progression upwards, right? And you know at what point can you start buying more. Just make sure you don't buy when the RSI is oversold, rather overbought, because then that could result in a pullback. But just ensure that these particular levels are the ones you get in. The first part, because it's freshly broken out, would be above 39.05.
Yeah.
Okay, so now there's the alternative part of things. Oh, another thing you need to make sure of is that the RSI remains bullish. Okay. Alternatively is that if it does trade below 39.05, it gives us a bit of a caution. It means just hold up a little, because it may pull back to 33.50, which means you could get it cheaper. But if it pulls back below 33.55 rather, it means we shouldn't invest.
Yeah, then it's a turnaround.
It's a turnaround and you're going to be stuck in that consolidation band, which is not cool, honestly. I've been stuck with a share, I think it was Vodacom for years. And I just didn't know when to buy or something.
Yeah.
So So that is the outlook with Hyprop, and this would be your trading, your trading strategy, buying at any level above 39.05. Don't get in if it falls below 33.55, and then the first target would be not really the first, but the target that it could be headed to would be the 75.20 mark, which is a nice 48%. Just buy and hold.
Okay.
You know what I'm saying? So that was with Hyprop. Same applies with Redefine, because these are just freshly. A lot of the other property stocks are already on those bull trends.
Oh, okay.
So these are the fresh.
Ran too much.
Yeah, they've run. You can get in, but the upside potential is not as much as these ones.
Easy money's being
just
made.
Okay. You know what I'm saying? So broken out of a bear trend, data back from 2018 to October 2022. So that's when it's broken out. Also trading sideways. So it's actually now followed that nice bull trend and broken out of that sideways pattern. So it's time to get in. And then when you zoom in, also a fresh breakout of the bear trend, as well as a key resistance level, which is the 740 mark. So it's been trading sideways between 470 is the level, and 3 Rand 05. Also coming off because of an overbought position. It's important at this point in time that it holds above 4 Rand 70.
Okay.
Because that's where the buying level would be. With another buying level will be at 5 Rand 45, and the upside would be at 740, 940. As it does that ascending phase, because remember that we descending, consolidating, ascending phase. So
really these levels are really important, because a lot of the time when you start to see a bullish trend, you always wonder if this is the time to get in, if it's maybe not expensive, how much upside you get. So it's actually quite interesting to see those steps that, you can actually see that you could still get in.
I love that you're getting that. Yes, because those levels obviously are past levels. So once breached, it then means that the upside is still intact.
Okay.
You see what I'm saying? So that's why I've got them there, so that you know that, at some point, if it's trading above 740, you'll be like, oh yes, by the way, Mox did say you can buy around that time, because the upside is still intact.
Okay.
So it's just got into the ascending phase. Which means it could do something called a return move. So it just goes back to where it broke out before it goes back up, which is, I love it when shares do a return move. Yeah. Because it just kind of beefs up that, it confirms that the upside is going to start progressing.
But it also really emphasizes the fact that ascension isn't a linear thing, and you can get those pullbacks, but you actually need to know if maybe this pullback is kind of manageable.
Yes, and because it's primarily, it's starting off that ascending phase. Yes. As I said, those levels assist you, because for example, if then 545 is a buying level as well. But if there was a pullback below, if it hit there and went below 740, then you would know that there's something changing. I keep saying 740, 470.
470.
Sorry, I'm a bit dyslexic with numbers. Today, So this is giving us a good, you can get in, but I think let's just wait for next week's trading activity. If there's continuous upside above 470, then it's a definite yes, you may get in. The alternative scenario is that if it does breach the 470, it means just wait. Okay. Because they it could get into that sideways band and go back to the 3 Rand 05 mark, which you don't want to be in. So it's best for you to wait. And in fact, if it trades below 3 Rand 05, it means you shouldn't be investing in it. Yeah, so that's...
More than caution, it's an alarm.
It's like, don't get it.
Yeah.
It's back into bearish mode. It will be a bit of a fruitless investment there. So your trading strategy would be buying at any level above 4 Rand 70. If it goes below 4 Rand 70, just be cautious. Don't get in until it trades above 4 Rand 70 rather. Goodness gracious me in this. I don't know why I say those numbers. But anyway, the one that is a no-go, red flag would be at 3 Rand 05. But upside potential to 9 Rand 40, which is 50%. You see, these are not really bad compared to a lot of the shares where they're trading at current prices. Yeah. So as I said, this is your, they've been in a real low PE ratio and as well as at a discount. So now showing this breaking out of the bull trend and showing this upside potential is really a good time to get in.
All right. Well, talking about a stock that works with timing is Grinrod. Quite a lot that's happened there in the logistics space over the last couple of years. Yeah, and there's been a narrative that Grinrod is also benefiting from the failures of Transnet. What are you making of Grinrod?
Okay, so in technical analysis, with the fundamentals, I just look at what the sentiment is, and it doesn't seem as if anyone is
fundamentals are really
by that. Given that upside that we're seeing, I think I've written something on Grinrod. I've been saying buy Grinrod, I think between 2021 and 2022.
Yes.
I've invested in it personally.
Yes.
And seen good returns from that breakout of. I mean, this bull trend is from the bear trend started in 2014 and only ended in 2021.
Yes.
So that's been it's been on a slide for a long time, which comes as no surprise as why the clever money or the asset managers could see it as attractive at this point or cheap.
Okay.
As I said, past 5 years, it's what you call the company valuation has gone up by 230%. To me, it's just ready for you to, and there is a lot of upside potential, by the way, because its highest level I think was at 28.95, and it's only now trading at 15.30. So it's maintaining that uptrend with that potential upside to 28.95. Now the question is, where do we buy? So it's maintaining that uptrend, and it's in a sideways band within that uptrend between 16.50 and 13.90.
Okay.
It's not alarming, but it's an interesting thing that it's hit both overbought and oversold in that sideways band, which means it may hit the 16.50 being overbought, which I would say wait until it actually pulls back from that overbought position. But 16.50 makes a good buying opportunity because it would then negate or rather escape that entire sideways movement that it's in, which is a bit frustrating when you're investing because you just want to see those.
So basically, if you buy now, you might just be stuck
between that range
of 13.90. Okay.
So it's important to actually get in when it is above that 16.50
All right, when
mark.
it looks like it's turning.
Because now it's gotten out of that consolidation band and is then commencing that upside.
All right.
So you'd buy around there with potential upside to 20 Rand 25, where you can buy again or reload. What I would say is reload. And then as it then heads up to 24.50 and that 28, I can't remember what that level was, 28.95. Thank you for that. So I am just saying wait for that 16.50. But this is just a buy. Like I think I actually bought it when it was at 570. So it's done me really good. But then there's an interesting part of it that that I've added, which some color to this picture, is I've just put this trend line over here, this blue one, which then means that if it does breach that trend line, there's something called a Dow theory, where every time an upper trend line is breached, the trend becomes steeper. Okay. So when above 16.50, as you can see from the blue trend line, it would then be breaching that blue trend line, thereby encouraging that steeper upside towards these other levels. So every time the upper slope is breached, then the trend becomes steeper, forming another phase of a bull trend. And then the third phase of the bull trend is quite steep. You just see candles going up. Yeah. But it's also the one that you need to start selling because it's too steep. So, but when we get there, we'll be looking at Grinrod.
But now we're still in the early stages.
We're still in the first phase.
Yeah.
So I think once it hits 1650, it will enter the second phase, which is slightly steeper than the current one.
Okay.
Thing is, the flip side, just to note that there has been these rising bottoms, which is already showing that the buying momentum is increasing more than, so that steep upside is underway, right? Alternatively is that if it trades below 1390, it means it's a caution, don't get in, particularly if it trades below, and it trades through this trend line, because then it would mark the end of this upside.
Okay.
So at 12 Rand is where it means you don't invest. Instead, if you are in the share, I would say that's the time you need to sell, get out, if it should fall below 12 Rand, because then there could be this correction that happens.
Okay.
And yeah, so that's about it with Grinrod. I love it. I've been enjoying the returns there. There is still some upside potential. How your strategy would be is only buying once it breaches the 1650 mark. And not getting in and actually selling if you're in already if it trades below 12 Rand. But the expected return from that upside at 1650 would be a 33%. Actually, it could increase, but for now we'll say 33%. So this is basically what your trading strategy for. That's the summary for what you would. Nice returns. I mean, 33, 50, 48, not bad.
Okay, really nice guideline there. Thank you so much for your insights there.
You're welcome.
Your technical analysis. We really appreciate it.
Thank you.
That was Moxima Gama from the Money Hub. And that's a wrap for today's edition of Trade of the Week. You can catch us again next week for technical analysis on some of your favorite stocks.